So let's get started. So the secret to trading is actually that there are no secrets to the markets. You have to learn the market, understand the market by yourself. And when I say understand the market, see, at any given point of time, only three scenarios can happen in the market. Either the market can be bullish, or it can be bearish, or you don't know. It is indecisive. See, no matter how much you study, only these three can be the case, or you don't know what it is. Nothing else it can be, right? So, you have to hone your skills to identify which one it is. That's what we want to do here. So, let's get started with today's video. And I would like to divide the video into 4 parts. So, the first part is about understanding what makes a trade. The second part is about understanding position sizing. The third part is about understanding how to take entry. And the fourth, I will keep entry, exit, TP, SL. This is all the third part. And the fourth and the last part is about psychology. So I believe if you master these 4 things, if you have balance among the 4, you can actually get a grasp of trading and you can make some real money out of the markets. So you must understand what makes a trade. You should have some definite criterias, and you should understand what factors induce probability in a trade. That's the first thing. The second thing, after understanding what kind of trade it is, you want to decide your position sizing. Now, this is a critical factor. This will decide your risk exposure, and this will directly affect your psychology. These two are very heavily related. So don't underestimate position sizing. It's very important. If you do this right, you will not struggle with this much. This is from experience, I'm telling you. If you fuck this up, you have lost this. And as far as the entry, exit, TPSL part is concerned, I'll teach you everything. So let's get started. So let's have a look at what makes up a trade. So the very first thing that I do whenever I look at the charts, whenever I look at establishing a trade, is that I straight away jump into multiple time frame analysis. So speaking of this in simple terms, this is nothing complicated. Let's suppose you want to trade in the 1 hour or 4 hour time frame. What you should ideally do is you should first visit the daily or the weekly time frame, and you should observe the charts here. And let us suppose the chart is something like this, and you should mark the key levels of this chart, the supports and the resistances and the supports. So this is something you should do on the daily time frame or on the weekly time frame. These zones which you mark here will be quite critical when you will use them in the hourly time frame or in the 4-hourly time frame, because price will have a tendency of rejection much more, as these zones are formed in the daily and in the weekly time frame, in the higher time frames. So at least you will see some rejections or supports from these zones. So the very first thing you do is you mark the zones on the higher time frame. The second thing you do is let us suppose this was your chart, and this was the corresponding RSI indicator of the chart, or some MACD indicator, whatever you use. So what you'll notice here is that your script made a higher high, but the RSI didn't. You saw a divergence. Now here I'm assuming that you are familiar with divergences. So this is a classic divergence. This is not a hidden divergence. So this indicates that the trend might be bearish further. So after marking these zones, you come across, let's say, a divergence and a double top pattern, which is here, right here. So let us suppose you are observing the charts like this. I'm just assuming a scenario. What you want to do is you want to figure out the maximum number of confluences for a particular direction, either the bullish direction or the bearish direction, or you have to decide it's indecisive. So you have to look, and if you see that there can be a bullish move ahead, then you will have to look for maximum confluences, maximum factors which are supporting this bullish move. If you see that there can be a bearish move ahead, you have to do the same. Now let us suppose that we see this chart over here. Actually what I'm describing here is nothing other than your XAU USD these days, as of the recording of this video. The chart recently made a higher high, whereas the RSI of the daily chart, daily time frame, showed some divergence. You can go and see this. So this is first factor in support of a bearish trade in the Forex pair. Now let us suppose I'm observing the charts and I want to increase the number of factors. The more factors I have, the more conviction there is in the trade. This is the zone. This is the part where you'll use all of your technical analysis. Whatever technical analysis you know, you have to use this here. So let's look for more factors. Now if you'll see this chart right now, what you'll see is at the double top which is forming like this, the candlestick patterns are something like this. I'm describing this here. There is a bullish candle followed by a big bearish engulfing. So the second factor which is in support of the bearish trade is the bearish engulfing. The first factor was the RSI or momentum divergence. Now let's look for more factors. Whenever you look for a trade, you should look for factors which are critical and which can prove to be in your favor. So let us suppose this was not true in this case, but it can be true in many cases. You're trading, and what will happen actually is that this might be a critical zone here on the daily time frame or on the weekly time frame. So if this happens near the zone, you automatically get one more factor in your arsenal, which is critical support resistance. There is no such thing as this being more important than the other two. The color has been changed. I just didn't pay the attention. Okay. Anyways, so this is the third factor which you can get in your favor. Sometimes this will happen, sometimes this won't happen. Usually this happens when the market is sideways, range bound. Right now it's not happening with gold. Now one more factor you can look for while looking at the gold chart, which is particularly unique to the gold chart, is if you go to the weekly chart of gold, you will observe that the candles look something like this. It's a bullish candle followed by somewhat a gravestone doji, as far as I remember, with a bearish candle. Now this is quite a pattern. If this is forming on a weekly chart, you should not ignore this, especially near the tops and accompanied by RSI divergence on the daily time frame. So you have something like a evening doji star. This was not exactly an evening doji star because actually this candle was shorter than this candle. But anyways, you have a bearish candlestick pattern on the weekly chart. This is the factor number 4, which can support your bearish trade. And how you can backtest actually this one is you just look back 2 years into the weekly chart of gold. What you will observe is whenever a pattern like this has appeared, whenever these two candlesticks have appeared, a good gravestone doji or a spinning top accompanied by a bearish candle, there has been some correction in gold for at least 2 to 3 weeks. And so now, like this, you have to analyze your trades. The more factors you have on one side, either the bullish side or the bearish side, the better it is for you. Now, apart from this, you can have even more factors. You can use all of your technical analysis here. Some guy will come here and say, okay, see, this was Elliott wave, this was wave 1, wave 2, wave 3, 4, 5, and then he'll say A, B, C. So some guy will say, okay, the same chart is also being confirmed by Elliott waves. I don't care. The more TA supports one side, the bullish or the bearish side, the better. Most of technical analysis should point to one singular side. Usually, in my experience, if you get more than three factors confluencing to one particular side, you can very comfortably take the trade. Now, this is what makes a trade. Now we will have some examples for the same. I'll just hop onto some charts and I will show you some examples. Now this video is actually made for people who are already familiar with a lot of technical analysis, or at least the basics of TA. And what happens actually is people either they don't understand technical analysis, or they know too much technical analysis but they are not able to use it. So right now I'm telling you how to use this analysis on your charts and plan a trade. So let's just jump straight into the charts and use the same example. We will use some more examples. I will give you some 2 to 3 examples using multiple time frame analysis and technical analysis. So let's go. Chart of gold, and as you can see, gold made a higher high, the price action made a higher high, but you can see a divergence on the RSI indicator, which is the factor number 1, which is suggesting for a bearish trade or a bearish trend further. Factor number 2 is this bearish engulfing candle, or you might also consider this as a factor number 2. This bearish Marubozu candle is quite convincing. Anyways, so you get 2 factors. Now if you switch to the weekly time frame, you will observe that after this gravestone doji, there is a bearish engulfing candle, and whenever you observe this weekly chart of gold, you will see that in the past, if there is a gravestone doji accompanied by a bearish candle, bearish engulfing type candle, you will see some correction, or you will see some retracement in the bullish rally. The same has happened here. This is an inverted hammer accompanied by a bearish engulfing type candle, and you can see some correction or retracement here. Over here as well, spinning top accompanied by the bearish engulfing, and a minimum of 2-3 weeks of correction you can see. Even here, the engulfing is not proper at all. Still you can see some correction. So this is quite a pattern on the weekly charts. This candlestick pattern is convincing enough for me personally, so I will consider this factor number 3. Now, three factors are telling us to short gold. Some of you might look at the daily chart and you can say that after the candle closed below the moving average, 20 smoothed moving average, or after the moving average started to change the slope somewhere over here, you can take the bearish trade. Anyways, whichever factor you might consider it to be technically appropriate for you. Some of you might say, okay, the Elliott waves are complete here, whatever it is. So basically these factors combined with some Bollinger Band expansion was why I took this trade. Let me just show you into my MT5 account. This is a demo account. I took a short trade on gold over here at this price level 2687. I'm still riding the rally. I booked some of my profits over here. Now the reason why I booked some of my profits over here, let me just switch to the hourly time frame and show you. No, I'll show you all that later, how to book profits and all that stuff. So now let's switch to US oil. Now if you see the chart of US oil, let's go to the daily chart. If you see the chart of US oil, the higher time frame chart, which is the daily chart, you will see that the 72.17 zone is critical. Price has taken support here many times and it has also been resisted here many times. So price either breaches this level or it retraces back from this level. So such has been the case and the story of US oil as of now, and the lower level has a similar story of providing support to the price. So I noticed that price was in this zone and you have something like a double top forming here accompanied by spinning tops. This was quite an interesting pattern for me, so I switched into the hourly time frame and I saw this over here. This is an evening doji star candlestick pattern, 3 candlestick pattern over here, which is quite convincing for me. Some of you can wait for disruption of a swing low and then take the trade, enter the trade. I don't exactly remember when I entered this trade, but I must have entered somewhere over here, I believe, because I give preference to Bollinger Bands. So if you look at the confluence of factors in this trade, the first factor is a higher time frame support and resistance, a higher time frame critical price level. The second factor, you can say a double top price formation is happening on the 4-hourly chart. It might be visible more clearly. You can see something like a double top is being formed. Not very clear, but still. And you might see some divergences. No, we have no divergences here as of yet. And then you see a candlestick pattern on the hourly chart which is in favor of the bearish trend. Apart from that, you see some Bollinger Band expansion, some good Bollinger Band expansion in the 15-minute time frame, which is quite convincing in my opinion. Such divergences in the Bollinger Band indicate some strong moves ahead, and once this swing low was taken out, US oil has been bearish. I'm still active on this trade. Now here also there is one more part to the technical analysis. If you observe closely, US oil has a tendency of stopping over here. Yes, somewhere over here. Even if you took the short trade over here, US oil will either stop here or will breach this down and will reach the lower level. It has a tendency of taking a stop over here. You see, it's like a bus stop for this price. Anyways, so what I did actually was, I remember I took this trade and I booked some of my profits over here, and then actually most of my profits, all of my profits over here, and then I opened a new trade here today. I should have opened it somewhere over here, but I was late in opening the trade. I opened it over here and I'm planning to go all the way down. The risk reward, I have actually maintained it now. I have kept it somewhere over here, so it's good. So this is the way I trade. I personally trade.
looking at factors, looking at Bollinger Band expansion. So even in this trade there were three factors. One is higher time frame support and resistance. Second is a candlestick pattern in the hourly chart, which I have shown you, evening doji star. And the third is expansion of the Bollinger Bands. This much is convincing enough for me to take a trade. So these were two examples of how various technical analysis factors are complemented, and then you make up a trade. So how to plan the target, how to plan SL, how to take entry, I'll tell you all that in another video. Thank you.